Hello and welcome to another update video about gold. Gold is a little bit boring at the moment. As we all know, these corrections in the metals, they take a long time. As I mentioned before, however, I see gold as possibly quite a good performer this year. And I think it could be the year of the metals, could be the year for gold, for another nice rally towards 2,400, 2,500 dollars. But these corrections just always take a long time in gold. Gold, silver takes ages because the rallies can be quite aggressive, as you've seen here towards the end of last year. Quite a bit of a rally there, and then this long correction, which to me doesn't look finished yet. But we want to talk about the short-term bearish but also short-term bullish potential, because to be honest, the low could already be in this correction. That's not my primary scenario, however, something that has to be considered, because, even though I think it's quite likely that we'll see a little bit more downside here, this is not bearish. This is simply, in my main thesis, part of a corrective pullback in a larger uptrend. So for me, this yellow box is very relevant because it is the area where I'm watching ideally for a reversal, so where gold ideally should reverse before breaking obviously below that 78.6 retracement level at 1894. So let's first of all talk about the short-term bearish potential. Overall, first of all, maybe before we do that, the main thesis is that we are currently in a third wave of an ending diagonal. This third wave is made up of an A wave, circle wave A, topped in December, circle wave B, not yet finished probably, and circle wave C, not yet started. So this is the wave structure for wave 3. It will take quite a bit of time before this gets completed, because we probably haven't even completed wave B, so the C wave then hasn't even started, and so on. But this is something that we have to consider, Okay, so let's talk about within this context. Let's talk about the short-term bearish scenario. First of all, as there isn't anything really bearish as long as we're holding above 1894. Below 1894, I will have to revise my assumption and would not look at something more immediately bullish. But at the moment, I still see it as quite likely that we're coming down a little further, that this B wave, circle wave B, is still unfolding after the A wave topped in December. And this B wave could unfold in a couple of ways. I see two likely scenarios. Either we have an A wave down, which bottomed obviously here around the 13th of December. That was around 1987. Then a B wave top here. This was the high at around $2,099. And the C wave to the downside could be unfolding, and we might have seen a wave 1 down. This could be a wave 2 up. Might have topped, and we could now next see a breakdown. To confirm this, we need to see a break below $2,005. Then this would be a third wave, a fourth wave, fifth wave, and it could land somewhere in the lower region of this support area. That would be a straightforward decline in 5 waves. I mean, I can always do a WXY structure. We might not go down that low, but there is currently no evidence that a low is in. Okay, I don't see any clear 5-wave move to the upside. But I will explain why we might not need to see that. So therefore, there is also a short-term bullish case. So that's one scenario. Again, I told you the level that needs to break to consider that, to make that very likely. Also, the last swing high should really not be broken to the upside. That's 2082. Then we have a 1-2 setup that could break to the downside. Or we could see this B wave, which at the moment presumably topped here on the 27th of December. This is actually just unfolding as a triangle, not yet finished. A, B, C, D, E. So if the next move down here is a higher low, and then we see another lower high, that could be a complete triangle, and we might see the breakdown afterwards. After a triangle breaks, the decline, in this case it would likely be a decline, is typically very swift. So these are the short-term bearish options. Again, don't get me wrong, this is all still just part of a bullish case. It would just involve short-term a little lower, because I haven't got any evidence that a low is in, and the pullback looks quite shallow. But there is also a short-term bullish scenario. How does that look? Well, in that case, we have already started wave C. It's at the moment not my preferred scenario, but if we see a break above this swing high from the 27th of December, and that is at, basically $2,100, let's call it like that, then this will become my preferred scenario. And in this case, the B wave bottomed already here. Yeah. It's, again, not my preferred scenario because this move down can also be counted as 5-wave move if I really want to, instead of 3. But it can be counted as 3 as well. It's just a little bit too aggressive for that B wave, but we'll see. We'll see. And also, this scenario comes with lots of problems. It would mean that the C wave to the upside itself here, this one, that should take us to $2,400, is an ending diagonal itself. So it's completely messy. That means this would be a wave 1 to the upside in 3 waves. We have a wave 2 to the downside, which bottomed on the 17th of January. The wave 3 to the upside is basically now unfolding. Then we should get a wave 4 and a wave 5. And this wave 3 consists of an ABC structure because, again, we're dealing with a diagonal. So the top that formed here on the 1st of February was likely the A wave of the wave 3. We might now be doing the B wave, but then if this count is correct, it should really turn to the upside pretty much now, and then a C wave to the upside. And that's how the bulls could make it from here. But literally, it shouldn't go much lower. And then we obviously need to break above that $2,100 level. Okay, so for this scenario, or at least, that's not preferred, but it's possible. It's something you have to consider as well. The thing is, what would be a first early indication that some kind of a low is in place? Some kind of a low. But that could be, for example, also the D wave of the triangle. Well, it would be a break above 2060 and then followed by a break above 2083. So in summary, I'm bullish on gold. Against the support range, I focus on higher. In the very short term, while there is bullish potential, I need to see more to really confirm it, like a breakout of this triangle to the upside, followed by a break above 2100. Until then, I focus very short term on lower because I haven't got any 5-wave move to the upside yet that would confirm to me that a low is in, and not even a break above resistance. So therefore, I consider lower more likely in the very short term, but looking at the bigger picture, there is plenty of upside potential. That's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, then check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.